Financial Issues. I'm Dan Celia. It's great to be here. 866-300-9298. 866-300-9298. If you have a question, you want to weigh in, we'd love to hear from you. You're welcome to do that. Let me just talk about the economic news coming up while we're filling the board up, 866-300-9298. So tomorrow, no economic data coming out today. Tomorrow we have the Empire Manufacturing Index. That's a New York sector of the Fed with their manufacturing index. It's interesting because this week we have tomorrow the Empire, and Friday, I think it's Friday. No, Thursday, we have the Philly Fed. So this week we have pretty much two major areas of manufacturing coming out with their outlook. Both of them are predicted or expected to be down. And I do have to say that I think it's legitimate for those numbers to be blamed on the weather, because these are two areas that are the Northeast Corridor, where a third of the population of the country lives, where, it was incredibly difficult to do anything, whether it's difficult to transport the goods that have been produced or whatever the situation is, but a very difficult time. So I would expect, I can't imagine how they would be even the same as last month. So they're likely to be down, and it is likely to be blamed on weather. And in this case, I would have to say the weather is probably a legitimate excuse. We also get the housing market index that is coming out for the month of February. That's tomorrow as well. That's also predicted to be down or the same. On Wednesday, we have PPI, Producer Price Index. Very, very interesting. It's basically talking about being down to about 0.2%. That's what most economists believe. If you remember last month, it was 0.4%, or last look at that, it was 0.4%. It's expected to be somewhere around 0.2%. That's the Producer Price Index. That is the cost in which it takes, what the cost is for producing goods. So that's coming out on Wednesday. We also get, and Wednesday is a big day because I think what most of the market's going to look for tomorrow is going to be this Wednesday Fed meeting minutes. So Wednesday, I think at 2:00, I'm not certain, but Wednesday the Fed minutes come out, and it will give everyone, there's going to be some analysts talking about it, and they'll start picking apart, trying to read between the lines and making some sense of what Janet Yellen, now under the leadership of Janet Yellen, what the Fed feels about the economy. So that's a pretty big report. It's very interesting because that Fed minutes report is very important to Europe and Asia, by the way. 866-300-9298. Of course, Thursday we get initial claims, those filing for first-time unemployment claims. They will be out on Thursday. And we get CPI, Consumer Price Index. That's what you and I care most about. And Consumer Price Index coming out on Thursday morning at 8:30. That is expected to be down as well. Likely, since producer price indexes are expected to be down, we should see consumer price index down as well. Philly Fed numbers, I already mentioned, coming out on Thursday. Crude oil inventories, natural gas inventories, both will come out on Thursday. And then Friday, the only real economic news we have Friday is the existing home sales. So existing home sales numbers will be coming out on Friday. Also this week, by the way, we've got two lines open, 866-300-9298. Also, this month, I would say the rest of the month in February. February is the month where the majority of companies declare what their dividend's going to be for the year. So what you get in February is you get companies that have never paid a dividend, have no interest in paying dividends in the past, that are now declaring dividends, if they are, and usually they declare that in February. February, their earnings reports for the fourth quarter is out. They are starting to look ahead into the first quarter and second quarter. So that is usually the month that we see dividend reports come out. So I think everybody is looking for dividend hikes, and that will be bad for bonds, good for stocks, probably. But everybody's watching for the big companies, the big consumer-driven companies, the Coca-Colas, the Pepsis, the Walmarts, the some of Priceline and eBay and those kinds of companies that are very much consumer-driven, some of the retail sector, some of the more large company sector too, I guess, like the Cisco's and those. They'll all be reporting, so that's going to be interesting to see that. And a lot of people, of course, waiting for that. President Obama is announcing and talking about a $1 billion cost to examine climate change because of the droughts in California. Now, he seems to be ignoring the fact that the rest of the country is in anything but a drought, but they're going to look at this and they're going to slate about $1 billion to do a study to get a zero result. How would you like to spend, only the government could do this, spend $1 billion for zero return? Zero return. Because that's what the return is going to be. It's going to be a page on page on page of reports about climate change. So, but he says this is not negotiable. This is, the debate on this is over. I heard George Will this weekend say, when you hear the debate is over, it usually means that the debate is over because there's a firestorm out there and I've lost. So, but that's what he's saying in reference. Now, we've got a struggling at best, I'm being kind here, economy. We've got nobody able to get jobs, no jobs being created. We got a poverty rate that's going up. We got a median income family that is as low as it was in 1978 when you factor in inflation. So we're having no wage growth right now, no wage growth at all. We're having starting to see a little bit of inflation begin to creep in. We've got more people on food stamps and disability than at any other time in our nation's history, and that continues to rise. We've got more people working part-time than any time in our nation's history. We've got the new normal of 34 hours worked per week, and that is likely to go to 30. We've got crisis going on. We've got no legitimate tax bill. We have no legitimate incentives to incentivize American corporations to grow and expand. And we're talking about $1 billion on climate change. Really? Just in case you thought that the competency or incompetence level couldn't get any lower. That's what you're talking about, $1 billion climate change bill. How about you take the $1 billion, forget climate change for a year or two. How about you take the $1 billion and you slate it for private contractors only that have already passed, gone through the bidding process for real shovel-ready jobs that are going to create a stronger infrastructure in America. That'll create jobs. Why don't you do that with your $1 billion? And why doesn't Congress attach to that not $1 can be spent unless it is for an infrastructure project? Rails, highways, bridges, period. No special carve-out projects. 866-300-9298. 866-300-9298. Let me go to Steve. Steve's calling us from Arkansas. Hey, Steve.
Hello. I'm kind of restricted on the amount of income that I can put towards this, but my wife has a $15,000 student loan that is running at 12.5% interest, and I was wondering if that was even legal, one, for them to do that, and two, is there any options for me to try and get that interest rate down? I am a member of USAA. I haven't contacted them yet, but I don't know if they would even take on that debt.
Do you have do you own a home, Steve? Do you have a mortgage?
Unfortunately, no. I need to get rid of this before I can start saving for the down payment on that.
Gotcha. Yeah, Steve, I would try. Yes, it's legal, number one, and higher is legal. So, yes, it is legal. You've got two options. You can go to a USAA and try to refinance that and see what they will give you. The interest rate will be lower. Whether they're willing to do it or not, well, you'll have to check it out, but definitely go to them and find out if you can do it. Also, you may want to contact your Sallie Mae representative. And if you Google Sallie Mae, Northwest Arkansas, wherever you live in Arkansas, if you Google that, you'll come up with, a number of offices, and you might want to give them a call and see what kind of see who they're working with. So Sallie Mae's not going to refinance it, but they'll give you a list or say, hey, look, we've got these 5 banks in your area that we are working with on this. What Sallie Mae does is just guarantee it. It's kind of like a VA loan or Fannie and Freddie or whatever, one of those. So I would do those two things and see if you can get it reduced. Here's the thing I would not like to see happen, though, Steve. I would like it if you say you got about 15 years left on it. It would be great if you could reduce it as a result of lowering the interest rate, but not adding any time to it. Trying to keep the time at, worst case scenario, keeping the time to where it is right now and not see that increase. So that would be an ideal situation. So I would try those two resources and see what you can find out.
Okay. It's raking me over the coals. I mean, 12.5% interest, and there's only my income in our family. So,
yeah,
I can't afford the 12.5% interest. I mean, I can afford the bill, but the interest rate is just ridiculous.
It is. And, it is just, it's getting to the point where so many of these student loans are as bad as the credit cards. And President Obama 2 years ago set out and was, or 2 years ago, 2009, I'll say. No, what am I saying? 2011. Went to all the college campuses talking about how, he was going to work to see the interest rate capped and lowered. Well, he did, but the cap's not very low. And, it has been totally ineffective. And it is a huge burden on our society. And frankly, it's probably one of the next bubbles to burst. We have, trillions of dollars in student loan debt. It's insane. It really is. So I think that if you work at it there, you can at least get the interest rate down to somewhat normal. Thanks, Steve.
Go ahead. Has 2 student loans, and one's 4.5% interest. And
okay.
This is the second one, and it's 12.5% interest.
Okay.
So do you think USA would refinance that? I really don't have any collateral to put up.
Yeah, I think if you can show good payment history and, just take that piece that's 12.5, I think that you have a good shot at getting a personal loan for that much money. It's not that, I don't know what it is. I just know it's under $15,000 once you carve out is it, did you say was $15,000 the total, both loans?
$15,000 is the principal.
On both the 4.5 and the 12.5.
It's around $20,000 on both loans.
Oh, okay, I got you. So I think you should be able to get that if you have a good job. What they're looking for is income. They're looking for not a lot of. I don't mean income in amount. What they're looking for is your ability and what your income history is. I've had a job for a number of years. I get this much income and so on and so forth. They're looking for consistency there. So, I definitely think it's worth a try. But if that doesn't work, then you got to go to Sallie Mae and see what they can do. See what they can do.
So if anybody's going to be willing to work with us, I'm thinking it's going to be them. I was just wondering if there was, but I'll have to get in touch with Sallie Mae and see if they can't help on a refinance.
Yeah, what they're going to do is they're going to help and tell you which local bank they're working with. So they're going to say, hey, there's this bank and this bank and this bank in your area. So if you go to them, they may even give you a name. this person who's handling, these loans. And that's probably your best bet. All right.
If I get the payment reduced, would it be your recommendation that I keep paying the same amount and add it to principal to pay it down faster?
Absolutely. I absolutely
Or would you try and put some of that into savings?
Well, I mean, it really is going to depend on how much the amount is. But if you're trying to save for a house, then, maybe split it, maybe put half to principal and half to savings. But I think it's really important that you get as much as you possibly can to principal. But yeah, I would split it, whatever the difference is. Thanks, Stephen. I appreciate the call. Great stuff. 866-300-9298. 866-300-9298. You're listening to Financial Issues. I'm Dan Celia. Also, there's some interesting information coming out that's talking about the dollar losing ground. I think I'm going to write something about this, but the dollar losing some ground again today against the Japanese yen. And it's very interesting because the Japanese stock market is in the tank big time and continues to go in the tank. And as they continue to go into the tank, their currency is gotten weaker and weaker. And it's very, very interesting because we ought to take a page out of this book. Last year, now Japan has this whole money printing thing down to a science. Nobody prints money like Japan. Well, they even stepped it up dramatically last year in order to drive the market up. It worked. They had a 58% market. What's happening now? The market's tanking. It's because false positives can't hold. 866-300-9298.